Hello, today's Sunday, September 9th, 2025. I'm Jason Shapiro with crowdedmarketreport.com. Today I wanted to sort of share a conversation that I was having with somebody. And the topic was tape reading. And what does tape reading mean? And, a lot of people look at charts, head and shoulders and cup and handle and support lines and resistance lines, and they consider that to be tape reading, and I don't consider that to be tape reading. That's technical analysis and can work for you, cannot work for you. That's up to you. But to me, at the core of it, tape reading is just looking at how the market reacts to various inputs that are coming in each day. And it's like when the market just reacts as expected, then to me, that's just sort of normal. And what's interesting to me is when the market does not react as expected. That's the tape possibly saying something, right? So it takes two things. One is you have to be able to be into and understand what is driving the current market and what the narrative is that's driving the current market. And the thing about that is wherever we are in the cycle or over time, that tends to change. The same type of input can be positive at one point, and the same type of input can be negative at a different point in the cycle. Just look at right now, the market for a while here has been reacting positively to the idea of lower interest rates, right? More liquidity, assets go up. That's kind of been the narrative for a while here. Whereas there are other times, like when the economy is in a recession and the market is going down because of that recession, that weaker numbers are negative for the market, right? It's not that hard to figure out where we are. You just listen, read a little bit, and you can see where the narrative is. But clearly now the narrative is, weaker number is positive because of the interest rate thing. So there's the narrative. So then we look at, did the number come out weaker? And if so, how did the markets react? Did they do what they were supposed to do, right? And again, if we look at the recent narrative, a weaker number is supposed to be stronger bonds, stronger stocks, and weaker dollar for the most part. Right? And therefore, with weaker dollar, probably stronger commodities and things like gold and silver and these ones that are traditionally negatively correlated to dollar. And that's what we've been having, right? So to read the tape, you want to know that that's the narrative. And then, like I say, you want to be able to measure or watch the market and see if it is in fact following that narrative. That's what tape reading is, right? Hey, the market should be up based on this, but it's not. The tape is saying something. Hey, the market should be down based on this, but it's not. The tape is saying something. And to me, that's really all tape reading is. It takes a little time to figure out the narrative. It takes a little open mind to let the market tell you what it's doing. And of course, there are times when it's more important than others. This you only kind of pick up over time and with some experience, but sometimes it can be a fake read, right? The market fakes you out all the time. You get these bull traps or bear traps, right? All of a sudden, the market looks bad based on a narrative and then just goes right back up. Okay, that happens. There's a lot of randomness in the market, but even so, still important to watch for these things because they give important reads as to the strength or weakness of what's going on in what asset you're trading. And this works in any asset that you're trading, be it futures, be it Bitcoin, be it individual stocks. How does a stock react to a positive earnings report, or how does a stock react to a negative earnings report? Those are clearly pretty easy reads because a better than expected earnings report is going to be positive for stock, no matter how you read it, right? A worse than expected earnings report is going to be supposed to be negative for a stock, no matter how you read it. Did it react that way? And when you look at the tape and how the tape reacts, the tape will react when the market is going to change direction way before the actual news or the actual narrative does. And an example of this was back when the markets were falling, the stock market was falling earlier this year on the back of the tariff stuff back in March and April. And then suddenly it stopped falling, even though the tariff news never got any better. And then later, we started to hear the narrative change to like taco and the tariffs don't matter that much. But that was way after the market already bounced. And like I say, the tape, the market reacting negatively to the tariff, we stopped way before that. So that's one of the main important things about watching it when the tape trades like this. So that's kind of the key to tape reading to me. And it's a skill you build over time, but a skill that I think is extremely important, right? For trying to find good risk reward situations in the market. Okay. Anyway, that's my thought. I hope that helps. Please like this video if you like it. Please become a member of our YouTube. Helps us get the word out. And check us out, crowdedmarketreport.com. Thank you. Hi, I just wanted to say, if you like daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.